I'm Dennis Williams, and thank you for joining me for part two of a four-part series on what's a line of credit. We talked about in part one that any one of the following bullets may apply to you as far as what you are looking at being able to do with your financial future. We also covered that CashMap focuses on a unique strategy for us as individuals, but that banks use all the time. They usually use our money to help them get ahead, and this strategy helps you use the bank's money to help you get ahead. We do this by keeping your money working 24/7 by safely using a line of credit. That in turn you save thousands of dollars in interest and build your savings. We show you how to create and save and later adjust your own personalized cash maps that in turn create scenarios that if you follow, you will dramatically grow your savings by helping you get out of debt and boost your savings. We also provide via our CashMap Pro app for iOS devices a range of payment plans that are convenient for you. The four simple steps that we use with CashMap after you take that first initial payment or draw from your line of credit and use it as a payment to that loan you want to get rid of is to deposit your monthly income in your line of credit. Then you shift your payment dates of your expenses that you normally pay throughout the month to the end of the billing period of your line of credit billing cycle. You then pay all your expenses from your line of credit, and then as the months go on, CashMap gives you the solution to know how much to take in small additional loan payments as draws from the line of credit that you make payments to that loan you want to get rid of. So, some of the line of credit features that you want to take a peek at is number one is you want to know that the interest rates are variable. But don't let that scare you, because by you moving your income into the line of credit and shifting your dates that you pay your day-to-day expenses to the end of the line of credit's billing cycle, you dramatically lower the amount of interest that you pay, and it could be as little as $4 a month. Because of collateral, home equity lines of credit are cheapest. Credit cards and personal lines of credit, because there are no collateral for these types of lines, the interest rates will be higher. The interest rate will be based on a variety of factors, such as your credit score, such as, again, if there's collateral, or your debt to equity ratio. Additional features will be that they're going to give you a checking account so that when you draw dollars from the line of credit, you're going to run it through the checking account to pay your expenses. And frequently with a line of credit, you also have automatic bill pay. There's usually a set period of time during a line of credit in which you're able to make draws before it transitions into a fixed loan schedule. Of course, this isn't true for things like a credit card, but it is true for home equity lines of credit. After that period passes, which for example, a home equity line of credit is 10 years, then there's usually a set loan amount for the remaining 20 years of that home equity line of credit. But at the end of the 10 years, you're free to be able to create a new line of credit. And when the competitive rates that we have going on in the market today, frequently those costs are zero to you. So fees and features of any given line of credit can vary widely, so you definitely want to shop around. And to learn what those are and how to track them, you can visit cashmapapp.com and read Shopping for a Line of Credit. So to learn more, again, visit our website at cashmapapp.com for lots of resource materials. You can read articles that I've written, shopping for a line of credit, using a line of credit, and creating your own line of credit scenario. Watch videos that I've created, such as A Picture Tells It All, which is a 3-part series, or using Create Your Own Line of Credit Scenario, as well as looking at the video on using CashMap Pro. Thanks for joining us, and we look forward to seeing you in part 3 of our 4-part series on what's a line of credit.